Definitely is not an easy video to make. As we know, all good things in life do come to an end. But I thought I would make this video to pretty much wrap up my reasoning as to why and share a bit of a story as to why I've come to this conclusion in my life right now. As we know, things do have a time span, and so does my journey in this. I know a lot of you watching this come to me for fundamentals, come to me for understanding the macro narrative. Lesson number one in the fundamental space: never trust the headline. Always understand the true story behind this. If you know me well enough, or if you have been watching me, you know I fucking love trading and I will never stop. You just got caught out on this on this headline. I am not giving up trading. This is lesson number one. What a week it was in the markets. We obviously had the Bank of Japan being the biggest mover, right? The biggest mover. At the start of the week, they said they won't announce the intervention. Friday, London fix. When everyone is calling it a week, myself included, all yen pairs down 500 pips. That is why, folks, you never believe the headline. And I hope you never believe the headline on this video too. What is going on, everyone? Happy Sunday. Welcome back to the channel. I got you, didn't I? I did get you. But welcome back to another video. What a week it was. In this video, I'm going to cover what happened last week, the macro drivers going forward. We have the ECB, the Bank of England, and the Federal Reserve coming up with their interest rate meetings. So if you're not up to date with your fundamentals, please carry on watching this video. I'm going to share my outlook going forward, possibly for the rest of November. I know October's not done yet, but I'm going to be sharing what my outlook is for November, right? And also my cryptocurrency outlook. I know there is roughly around 16 months till the next Bitcoin halving, and I'm going to speak to you about how I'm positioning myself for that to obviously be prepared. So without further ado, I know you're watching this right now and thinking like, he got me. But let's jump into the charts and let's go from there. Right, as we know, dollar, the chart I always look at, the only chart I look at for everything that I'm doing. Weekly time frame, very bearish right now, just from a technical standpoint. And this was simply because the Ministry of Finance in Japan decided that on the London fix at 4:30 on a Friday afternoon, that they have to intervene. So let's break that down. Ministry of Finance is basically like the FOMC committee for the Federal Reserve. You have the Ministry of Finance on one end and you have the Bank of Japan on the other. The Bank of Japan are worried about keeping their upper limit on their 10-year yield capped. What that simply means in layman's terms, they are happy to buy an unlimited amount of government bonds. That is also known as JGBs, Japanese government bonds. Now there again, that's their mandate. You got the Ministry of Finance over here that's worried about FX levels and the value of the yen. Their mandate and the Bank of Japan's mandate, unfortunately at the moment, are clashing, right? Head in head. And that is not obviously what we want to see. At the start of this week, you had Finance Minister Suzuki announce that they won't be announcing when they intervene. And if they do intervene, it will be in a stealth intervention, right? As this tweet over here. Bullshit. Like the title on this video, it's not true. We know they were going to intervene. It was simply a matter of when. I made a video about a week and a half or 2 weeks ago on Bank of Japan intervention, and when it could possibly happen, no one knows. They do obviously have the access and the money to do so, and as we saw this Friday, they intervened by $15 billion. That simply means they took $15 billion of dollars that they had in storage and they bought yen. And that was from the Ministry of Finance, the MOF. They bought the yen in what is known as an intervention. And as you can see from the chart over here, every intervention hasn't helped. Why? The global yield frenzy is what's keeping dollar yen up at these highs. So my only concern with this current move is how long is it going to last? And are they going to intervene again? So definitely stay tuned and do follow me on Twitter. I am super active on my Twitter regarding all of this. I'll put my handle over here. Now there again, with all this going on, it is just a case of timing. Fundamentals is simply timing. I actually tweeted on Friday, immediately when I saw the action, dollar yen was down 100 pips at the time, simply when I tweeted the MOF are trying one. And Strues Bob, however you want to call it, about half an hour later, dollar yen was down 400 pips to the downside. That is why fundamentals are crucial. So follow me on Twitter, turn those notifications on, so hop straight back into the charts. So that sell-off in dollar yen triggered a sell-off in dollar. Now, this was just a positioning move. If you go ahead and take $15 billion worth out of the market, of the US dollar, naturally you're going to have a sell-off. You're going to have a sell-off across the board. We obviously saw dollar yen straight back, not dollar yen, excuse me, dollar index straight back into that 112 handle, right? So it had our high, it gave us our profits that we wanted for the week. I have a Friday rule, by the way, that I stopped trading at midday. Boy, am I glad I stopped trading, because I was short in the likes of euro, pound, dollar, and Aussie dollar. So I'm glad I took my profits on that, because we had immediate reversals. Aussie straight back into the highs, euro back into the highs, cable back into the highs. And this, there again, is evidence that you have to take some money off the table. Just looking at cable, if you were short on cable, for example, let's get our fib back on. I speak about this on my London sessions every morning. If you were short on cable and price hit your fib target, close your trade, take your money, call it a day, right? Like, I encourage you to stop. Just stop. That's the hardest thing to do. So cable obviously broke the prior low, which is another rule of mine that I have. If we breach a prior low, lock in some gains, because the reversal can happen, right? The reversal can happen. In the likes of Aussie, I'm glad, I took partials during the week, and the other latter half of my position stopped me out at 63.50, just there by my crosshair. On that move of there. I was obviously disappointed when this rolled over immediately thereafter, but there was no trade. There was no correction into an area of interest to short at that time. So left the trade alone, and obviously later behold, the Bank of Japan and the MOF intervened. Looking at dollar yen, right? Massive sell-off. Massive sell-off. From the daily high to the daily low was a 570 pip range. Let's go back to the previous one. The previous intervention that they'd done was around 4 trillion worth of Japanese yen, which was around $28 million, if I'm correct. From the high to the low of that intervention was around 550 pips. Guess what? Same as this. The exact same move. And I'm going to put a chart over here. Study that chart. Look at that chart. This simply shows us that the intervention is not enough. This simply shows us that there is a bigger narrative at play. This shows us that if they do want to assist in FX levels and FX volatility, as they say they do, there's going to be a lot more that's needed. So with dollar yen right now, I'm expecting a temporary bottom to occur. Am I going to be buying this bottom? Possibly, right? Because there's something else coming up that you have to know going forward. So dollar yen, pound yen, euro yen, CAD yen, everything tanked, right? Everything tanked. Now, this obviously spurged with a rally in risk. You got equities rallying higher. You had gold rallying off the 1627 lows, right? Massive rally all the way up to 1657. So over a 200 pip rally on a 300 pip rally on gold off of the back of MOF and Bank of Japan intervention. So it shows you that you have to know the overall narrative. And just because they said they weren't going to intervene, what the fuck did they do, right? What did they do? Just because I said in this video that I'm going to stop trading, I'm about to turn shit the hell up. So gold, obviously, massive reversal. And looking at the market overall, it's important to know, and we'll go to the economic calendar for this one. I want to show everyone, I use investing.com, by the way, for my economic calendar. Let's close that. Looking at this right now, we can see that, fine, our next interest rate meeting that we should be worrying about is the ECB, right? Scheduled to possibly take rates higher by 50 basis points according to them. That's their forecast right now. And then you also have the Federal Reserve on November 2nd, and you have the Bank of England November 3rd. That week's going to be extremely busy because we have non-farm payroll as well that week. Non-farm payroll comes out the first Friday of every month. So keep that one in mind. So for myself, I remain a dollar bull. I remain a dollar bull. It is simply where we are dollar bulls from. I know for a fact this move to the downside was simply because of Ministry of Finance intervention of $18 billion worth, right? So that being said, I need to think if the prior intervention on dollar yen got reversed because of the rapidly rising yields that we've been having. If you look at the yields, global yields are soaring because all central banks are tightening their policy. If that is the case, dollar yen is more than likely going to bounce from these lows. I would have loved this high to get retested, if I'm honest, just for technical perfection. But that didn't happen. That could still happen this week. Possibly a little bit of a dip lower, which will send broad dollar lower. If it sends broad dollar lower to around 111, I'm still bullish dollar. Because I know this is going to be short-lived. I understand the Federal Reserve are going to continue to raise rates. I understand the current Fed funds rate is pricing in the interest rate to be around 4.75 to 5%. Due to the Bank of Japan intervention that happened this Friday, the rate dropped slightly. So the stock market rallied, right? The stock market rallied. You had the Dow Jones 2.5%, the S&P 500 2.6%, NASDAQ 2.8%. Anything can happen in these conditions. Anything can happen. So for myself, I remain a dollar bull. It is simply where I'm a dollar bull from. With only one trading week left in October, it's important for us to wait a little bit. Don't rush, but also understand that this current trading week is what will price in these events. So if we know we have the ECB this week, we may have, right? We may have an extended, let's get rid of this. This trade is finished. Notice how, and just simply for educational purposes, I gave the short position out, right? Notice how we hit our fib and we bounced immediately afterwards. That's to show you, don't be greedy, lock in those gains. Lock in those gains. A dripping tap fills the bucket, right? So looking at euro, I do expect, if I just have to zoom out slightly, the chances of us, let me get rid of this, the chances of us possibly hitting parity are highly likely. Let us hit parity again. I don't care. If we were to hit parity once again, it'd be a great shorting opportunity for us dollar bulls. Right? Think about that. Even if I look at an overall technical perspective here and draw my fib from the parity high to the low that we hit on 13th of October, if we were to come up to 99.20 or 99.50, 0.9950, right, just 50 pips away from parity, I'm interested in a short. I'm interested in a short. I still am interested in a short. The Federal Reserve have not pivoted. They're going to continue raising rates. 75 basis points is priced in for November 3rd, right? That being said, dollar isn't where it should be if the Fed are hiking rates. So there's a gap. There's a gap there, and that's where us traders step in. We've got to step in and pick up those cheap dollars. As a trader, we know you want to be buying low, selling high. If you're buying low, selling high, you got to be buying these dips in dollar, right? These dips in dollar are so crucial right now. So that's my sort of point of view. If I understand where dollar is, I understand where the whole market is. I expect gold lower, silver lower. Any little relief rally that we have, short it, right? Short it. Oil. Any little relief rally in oil, I expect oil to come back to about $88.50, $89 a barrel. And then I'm happy to short that once again. And I mean, just looking at the overall market, I expect pound yen to have a bit of a relief rally back into the highs before shorting it again, right? It shouldn't be there. It shouldn't be there. Euro yen, same thing. We may get a bit of a relief rally, 147. I'm happy to short, but it's all dependent on dollar yen. If dollar yen revisits at 150 high, you got to be careful shorting your yen crosses, right? So keep that one in mind. Cryptos, what everyone's talking about, right? Bitcoin. I have bad news about Bitcoin. Really bad news. There's an old fundamental trick that you gotta use, right? If an asset does not rally on good news, it is going to die on bad news. Remember that. Why I say that is, you had equities on just a little bit of a relief rally of the Fed's funds futures rate pricing in slightly lower because of the Bank of Japan and MOF intervention. You had equities rallying 2.5%, 3%, massive rally, right, on the day, massive. Bitcoin, still at 19K, has not moved an inch. Not moved an inch. I don't like the price action. I think this is a bear flag waiting to happen. I think this is a inside bar. Oh, wrong one. I think that's an inside bar, right? I think it's an inside bar waiting to happen. If you look at this on the lower time frames, there's definitely a bit of a bear flag going on here. In my opinion, there's nothing bullish about this, right? It is just waiting. It's waiting to break. Yes, don't get me wrong. If we do have a fake out to the upside, it might provide great shorting opportunities because I still do see this at 15K. Lower, more than likely lower, right? But looking at this, it's like, shit, okay. Do I short this right now, tuck my stops above the high? Because that is also a trading strategy. You can if you like. Where would I put my stops? $20,500 a coin, possibly. But Bitcoin is not moving. If it doesn't move on the relief rallies as it trades in tandem with risk right now, it is going to suffer a lot more downside in my opinion. So lower than 15, I reckon anywhere between 12 and 10 would be the bottom of the next cycle. But looking at this overall on the higher time frames, we know you obviously have the halving coming up next year. Not next year, March 2024, March 2024. You're having the halving. So do you expect some sort of cycle to occur, another bull market? But that gives the global equity markets a chance to bottom out too. That gives risk assets a chance to find their feet too. So don't worry too much about where it is now. If you are a long-term bull in the space, whether you're XRP, Avalanche, Solana, Polkadot, name your pick. You got so many. You got Helium, you got FTT. FTT is a great one. You got Polkadot, you got Chainlink, Serum. There are a lot of things that you can capitalize on if you're a bull in the space, but don't let the short-term downside dictate your sort of opinion and bias on the move overall. I am bullish on XRP more than I ever have been. I do think the upside outweighs the downside risk, right? You got this downside and fucking loads of upside. So whether you were to buy now, feel free. It's like putting a risk reward on, right? If you were to average your way now, can't go lower than 0, right? So invest what you're willing to lose. The upside is there. The upside is there. Even if we were to revisit the not this all-time high, the previous cycle's all-time high, you're still looking at a good 6x on your money. So keep that in mind. But average your way in. Don't put your life savings in now and then start stressing buckets when it falls 10%. Take your time. Average in 20%, 20% every so often, every few months. So you're not bothered, right? You're not bothered. You have some skin in the game. And as I said early on last week, if you want to profit from the market, you need skin in the game. You need some skin in the game. You cannot profit from the bull market. You cannot profit from trading if you have no skin in the game, right? Everyone wants to make money, but no one wants to lose. No one's willing to lose. It's having calculated risk. If XRP went to 0 and you put all your net worth in, you're a fucking idiot, right? Don't do that to yourself. Calculate your risk. Put in 10% of what you're worth. Let's say you got 10 grand saved, put in $1,000. You're willing to lose it, right? It's not going to put you homeless if XRP goes to 0. Think carefully about what you're doing. This is not a game, right? It's not a game at all. But I hope everyone enjoyed this video. I am bullish dollar. It's not going to change. And when it changes, you will be the first to know. but I am bullish dollar. I am bearish risk, so I'm still bearish on cryptos. I expect further downside on cryptos. I am bullish on this channel, of course. I hope you all enjoyed this video. Do like, comment, share, subscribe. And as usual, I'll see you on the next video. Take care, and never give up. Carry on chasing what's yours. And I'll see you on the next one. Take care. Bye-bye.